Now, people say, well, what's the difference between an S Corp and a C Corp? Let me explain. All right. I'm going to explain it to you, and then I'm going to show it to you. Okay? All right. Just follow me, and I'm going to explain it to you, but I'm going to show it to you. Okay. Whenever you open a business, let's just say today is January 1st. Just January 1st. I know we are not in January, but I'm saying for illustration purposes. In January 1st, you open a business. Guess when you have to file taxes for that business? Next year. Next year. You have to operate that business from January through December, and then you file taxes next year for what you did this year. We all on the same page? Yes? We all on the same page? Cool. A C Corp is a person. You are a citizen or resident of person. You are a citizen or resident of the United States. Maybe not, but I'm just saying. The term United States person is a citizen or resident of the United States or a corporation. The only difference between you as a person and a corporation as a person, you have natural blood running through your body. You have natural blood running through your veins, right? I can touch you, I can feel you. A corporation don't have natural blood running through its body. That's it. But they're treated the same. The S Corp is just a way to file taxes. Let me tell you why that came up to play. Watch this. I'm about to prove it to you. If I asked you if you wanted to be taxed once or taxed twice, what would you tell me? If you wanted to be taxed once or taxed twice, what would you tell me? Naturally once, right? Now, here's the crazy part. Watch this now. You never asked me how much was the tax. You never asked me. How much was the tax? I could tax you 90% one time and 2% twice. 1 and 1. You see what I'm saying? I'm giving you all ways to see that it's the way that we process information that's stopping us. Being taxed once and taxed twice, tell me what the tax is and then let me make a determination. Here's where self-employment tax come in and why people go the S Corp route. All right, here we go. When you work for Walmart, let's just say you work for Walmart and you make $40,000 a year. Okay? You make $40,000 a year. Nothing wrong with that. Whenever Walmart pays you $40,000, you have federal taxes taken out your check, Social Security taxes taken out your check, Medicare taxes automatically. God forbid you live in a state that has state taxes. But you're going to have those three, federal, Social Security, and Medicare, all taken out your check. Okay? Well, when Walmart paid you that $40,000, if Walmart made a profit, you wouldn't be responsible for Walmart's taxes. Why? Because Walmart is its own entity. It's its own person. And you are your own person. When people are explaining taxes to you, they forget to tell you that you're the owner of Walmart and you're taking money from Walmart. You see? But let me explain the S Corp. Whenever you work for yourself as an LLC, you have to pay what's called self-employment. Now I'm going to show you how the blind leading the blind. You ain't even paid attention to it, but watch this. Whenever you work for yourself, you have to pay self-employment tax. That's 15.3%. That consists of Social Security and Medicare. Why do you have to pay 15.3%? Well, because again, if you work for Walmart, you already had taxes taken out your check. If you work for yourself, you still have to pay those type of taxes. The difference is whenever you are an employee of Walmart, you don't pay that total 15.3%. Why? Because Walmart being your employer, they are responsible for half of that. So Walmart pays 7.65, you pay 7.65. Together it's still 15.3. Okay? When people file their taxes as an S Corp, what they are telling the IRS is, I don't want to pay the self-employment tax. So, do you pay 15.3%? No. Why? Because whenever you do file your taxes as an S Corp, you also have to be an employee of that company. So when your company pays you as an employee, you're going to have federal, Social Security, and Medicare taxes taken out your check. Will you, as the employee, get 15.3%? No, you got to pay 7.65. Who you think pay the other 7.65? Your company. You're still paying it. However, let me change your thinking. Whenever you decided to become a business owner, I thought you graduated from being an employee. I thought you didn't want to be nobody employee. You didn't want to work for nobody. Well, why are you still thinking like that? When you left from working for somebody else and you said, I want to work for myself, why didn't you still want to be an employee? That's because old habits die hard. You've been working for people all your life. All you know is how to think like an employee. You don't know how to think like a business owner, a shareholder. Let me explain. I'm gonna just talk to you all like on federal taxes. I ain't gonna talk about self-employment tax. On federal taxes, watch this. The federal tax bracket starts at 10% and it caps out at 37%. That means if you make $5, you pay 10% in taxes. If you make $40,000, you pay 12%. $40,000, $40,000, 12%. Now watch this. Watch this. You see a corporation? The profit of a corporation is taxed to the corporation when earned. That means if Walmart makes money, Walmart pays taxes. If you're the owner of Walmart and Walmart makes a profit, you have to pay taxes. And then if you take money from that company, and then it is taxed to the shareholder when distributed as a dividend. You see, when people talk about double taxation, you're the owner of the business and you're taking money from the business. That's it. But you see, it says it's taxed to the shareholder. That didn't say it was taxed to the employee. Now, let's just say that as a shareholder, I paid you on what's called a qualified dividend. Remember, $40,000, 12% in your current situation. Remember that. $40,000, 12%. Now, watch what happens when I pay you on a qualified dividend. The qualified dividend tax bracket starts at 0. That means somebody qualified. How much you pay on $40,000 when you're single now? You can get paid $94,000 if you're married filing jointly and pay 0% in taxes. You can file head of household and get up to $63,000 and still pay 0% in taxes. All because why? You changed the way that you think. You stop thinking like an employee and you're starting to think like a shareholder. You see? Just that fast.